Hi everyone, welcome back to the audit and attestation class. This is very special class because in this class we'll be covering the topic report on audit engagement. This is part 1. We have part 2 and part 3 also, which is coming just after this, right? And this part 1 will be covering in detail about forming an audit opinion, including modification of an auditor opinion, and we'll do some practice question also. So let's dive into for more detail, but do watch part 2 and part 3 for the complete information.
Hi everyone, welcome to the last chapter for the audit section. So today we're going to cover the 5th chapter, which is around like 10 to 20% of your examination. So I think you're already done 80 to 85% of audit. So maybe like by the end of this weekend, so you'll be comfortable if you want to try the mock test. Once you are almost done with more than 90% after this weekend. So only like miscellaneous things will be left over for the next weekend to wrapping up this entire audit section, right? So can you all see my screen?
Yes, sir.
Okay,
Yes, sir.
so yeah, in the 5th chapter, we're just forming a conclusion and reporting 10 to 20% average. You can say 15% you can expect. And majorly you will see things coming out from audit report, review report, and attestation reports. That may be for the issuer and non-issuer that you need to keep in mind when it comes to your exam. You know, sometimes like student get confused. It's a audit report on which you need to give the, you can say, specific multiple choice question response or maybe the simulation, but sometimes they miss to catch hold whether it's for issuer and non-issuer. There are certain differences between like audit report for the issuers and for the non-issuers. So that those things you need to keep in mind when you are dealing with the audit reports or review reports accordingly. Right. So here in this 5th chapter, we'll be covering forming an audit opinion, including modification of the audit opinion. What all type of modification we do? Gap issue, gas issue. You guys remember? Yes. No. Yeah. So what are the types of report? This we have already covered 2 times. One in our very first lecture, and then we discuss in 3rd chapter as well. You guys remember? Qualified opinion, adverse opinion.
Yes. Opinion, yeah. Okay.
What was the 3rd one?
Disclaimer of opinion.
Disclaimer of opinion. When you do qualified opinion,
so where you do
What is the processing impact of gas is adverse, then we will choose the qualified one.
Say that again, Kashish.
When the processing impact of gap is adverse, then we will give the qualified.
When there's a gap issue and
If the processing impact of gap is there, then we will issue qualified or
okay. Anyone
so
else?
When the effects are pervasive, then we give when there is a material misstatement and the effects are adverse and it's pervasive over all the material all the statements, then that's a qualified disclaimer. तीसरा क्या था? I've forgotten. Like
Qualified, adverse, and disclaimer.
Adverse, then that's an adverse report when the effects are pervasive. And if it is not, then it's a qualified opinion. Like we have a misstatement in a particular account balance or statement, then and it's not pervasive, then that's a qualified opinion. And then disclaimer of opinion is when the auditor is not sure what to comment on the financial statements, like there is a scope limitation or there is something like that, then that can be he can give a disclaimer of opinion that he's not aware of and totally get.
If the management doesn't give engagement letter on any particular document which has been required, then it's better to get the disclaimer of opinion for that.
Yeah. So Pranjali, Nimisha, Avneet, you guys wants to add anything to what Ayush and Kashish has shared? Yes, no? Okay, more or less, you guys are okay, but there are two things. One is like qualified or modified opinion, right? So that may be on account of gap issue or maybe on account of gas issue. Gap issue when there is a problem in application of accounting policy, accounting principle, or financial reporting framework, right? Gas issue when there is a scope limitation, they are not allowing you to perform certain activity, they are not allowing you to perform certain audit procedures. So if the misstatement is material, then you'll be issuing a qualified opinion, whether it's a gap issue or a gas issue, right? When the misstatement is material and pervasive on account of gap issue, you'll be issuing a adverse opinion. When misstatement is pervasive on account of gas issue, then you'll be issuing a disclaimer of opinion, right? And if you do not agree with the management or remedial action taken by the management, it's better to withdraw from the engagement, right? So those things in detail we'll be studying in 5.1.1, in which we'll be studying like forming of audit opinion, including modification of audit opinion, and what all texts you need to write in those audit opinion. Second is form and content of audit reports. So to whom you need to address will be like, you can say the content of the audit report, whether it's like standard report, qualified on account of gap issue, gas issue, adverse opinion, disclaimer of opinion, what all should be the content in the respective audit report. So I have summarized this very beautifully in this notes. So I'm telling you those couple of pages notes will give you the crux of the entire story for the entire audit section, or you can say conclusion section. Because if at the time of exam, if you just revise those 4 or 5 pages, which I made the notes for this content of the audit report, I'm sure you'll be done with this chapter for sure, right? So including like emphasis of matter, other matter paragraph, here we'll be studying and understanding what is emphasis of matter paragraph, right? Why we need to write emphasis of matter paragraph, and what is other matter paragraph, why we need to write those other matter paragraph, how it is different from any qualification and adverse opinion. So those things we'll be studying here. Then after in 5.1.3, we'll be studying audit of internal control integrated with the audit of financial statement. So when we do integrated audit of financial statement, for the issuer or non-issuer, when it is mandatory to do integrated audit?
So it's for the issuer.
Sir, it's for the issuer.
It's
Yes.
mandatory, and for the non-issuer, it's not
It's
mandatory.
not mandatory, sir.
Right?
Yes.
You can do so if management need, but
Yes.
it's not mandatory. Why it's mandatory for the issuer? Because of the PCOB requirement, right?
Yes.
So that will be studying over here, what you need to perform and what you need to conclude, what will be the content of the integrated audit report, and what will be the content for the issuer, and what will be the content for the non-issuer, what will be the content for the single report, and what will be the content for the dual report. So you can issue an integrated report, one report for both financial statement as well as for the internal control, but you have an option to issue 2 different reports as well. One is on the financial statement and one is on the internal control over the financial reporting, right? So that will be studying here. So hopefully 5.1 and 5.2 we'll try to cover today, and then 5.1.3 and 5.2 will be finishing off tomorrow, right? So in 5.2, report on attestation engagement. So attestation engagement comes under which standard?
SSA, yes.
SSAEs.
A.
Statement of standard on attestation engagement, right? So for SSAEs, for attestation engagement, we'll be using SSAEs, right? In that, we'll be studying general standard for attestation report, all those SSAE, then agreed upon procedure, what type of reports we need to issue for the agreed upon procedure, because we already studied what we need to do for the agreed upon procedures. In that, like, procedure need to be specified by the party who is required the examination of the respective financial statement, line item, accounts, class of balance, or disclosure, right? Here we'll be understanding more in terms of reporting perspective, right? What exactly we need to write when we will be issuing agreed upon procedure report. Last one is reporting on the controls at the service organization. What was the report for the service organization? SOC 1 and, are you guys with me?
Yes, sir.
What all reports we issue for service organization? SOC 1 and?
I don't remember.
Oh boy, SOC 2. It's so easy. When we issue SOC 1 report for the design effectiveness of internal control. When we issue SOC 2 report
For the operating effectiveness.
for the operating effectiveness of the internal control at the service organization, right? Who issue the service organization report? Service organization auditor, right? So if you need to write a service organization audit report on their internal controls for the benefit of the other entities for which the service organization is providing services, then how you need to draft that type 1 and type 2 report, that we'll be studying here. Make sense? Yes, no?
Yes, sir.
Cool. Okay. And then tomorrow we'll be starting on 5.3 as well, in which we'll be studying accounting and review service engagement. So review service engagement comes under which standards? SS, ARs, SARs, right? Which standards for the review engagement?
SSARs.
SSARs, right? For accounting and review engagement, we'll be using SSARs, right?
Yeah.
So accounting and review engagement include preparation engagement. What is preparation engagement? In which you prepare the financial statement for the management, right? Yes, no?
Right, sir.
Okay, thank you. Okay, so in preparation engagement, does independence mandatory?
No,
Is
sir.
the independence
No.
mandatory?
No, sir.
For
No,
the
sir.
preparation? No, that's right. So second is compilation report. Compilation report. In the preparation engagement, you do not issue report. In the compilation report, you compile the financial statement as per the reporting framework and you issue the compilation report in which you give the reporting that compilation is in line with the respective financial reporting framework, right? Here also independence is not mandatory. Third is review report. Review reports is for the limited review as well as for the review of respective financial statement line item, account balance, and disclosure or the respective assertion, right? In the review report, you are giving limited assurance. As you are giving limited assurance, you are required to be an independent. CPA is required to be an independent for the review report, right? So in this 5.3 section, we'll be learning for the preparation engagement. If required to report anything, then what we need to report. For the compilation report, how to draft the compilation report, and for review report, how to draft the review report. So those all things will be learning in tomorrow's section, right? In next week, we'll be studying more in detail on reporting on compliance. When reporting on compliance is being required, when you are performing single audit. Do you remember single audits? Government audits, you guys remember?
Government audits, I remember. Single audits was, I can't recall.
Not recall. It was very first chapter. It's almost 2.5 months.
Revise again.
Yeah. So compliance report is when you need to comply with specific law and regulation, or maybe when you get any grants or funds or award from the government or federal agency for which you need to issue the compliance of the utilization of those funds, awards, or to claim certain, you can say, grants. You are required to follow the, you are required to do the compliance audit. So how to report on those compliance audit report. So that will be studying in 5.4. Then last one is other reporting consideration. So in this, first we'll be learning comparative statement and consistency between the period, why it is being important. If there is not consistency, how do you need to tackle in the respective reports, whether it's a review report, audit report, compilation report, if there is not consistency between the two periods, then how you need to report those things in your respective reporting requirement. The next is other information in document and audit statement, and 5.5.3 review of interim financial information. So here we'll be learning review of interim financial information, like for you can say listed company, we do that quarterly review, right? For the private company, sometime review is being required if they are planning to go for any funding, or they are planning to go for an IPO, or they are planning to propose their shares to any third party. So at that point of time, or maybe sometime internally for the management requirement, they require like third party or as an auditor to review the interim financial information, or maybe in case of any merger, acquisition of any private company, they require to perform the review for those period which is unaudited, or from the last audit date to the current period, they are required an interim review of the financial statement, right? So how to draft those reports, we'll be learning here. The next is supplementary information. So supplementary information, if you have seen like the financial statement, I think for two companies financial statement I have shared with you, for the Microsoft and General Motors, right? If you have seen, in addition to the financial statement, they have few other information as well along with the financial statement, which generally go in the 10K, right? What are those statements? Management discussion and analysis, right? Have you seen that part, MDA, management discussion and analysis part?
Yes, sir. Management discussion.
Right? So those information are not, you are not doing audit, but those generally go along with the financial statement. Director reports, right? Those also generally go along with the financial statement. You do not perform the specific audit for those director report or management discussion analysis, but there are certain responsibility for the auditor to ensure that what is being mentioned in the MDA or director report is being in sync with the financial statement we have audited. It should not be like that in audit we are saying like everything is good, but in director report they are saying there's an issue of going concern, right? So as an auditor, it's being our responsibility to ensure the consistency of the supplementary information to the financial statement, right? After that, we'll be studying 5.5.5, which is additional reporting requirement under the Government Accountability Office. This we have studied in detail, what all additional audit procedure, or what all you can say audit procedure you dedicatedly or specifically need to perform for the government audits, right? So that for that you need to follow 𝐂𝐻𝐿, right? Do you remember 𝐂𝐻𝐿?
Yes, sir.
Right?
Yes.
Government accountability standards, right? Those you need to follow for the government auditing, and accordingly what reports you will be issuing for those government audit, what will be the form content of that report, that we'll be learning over here. After that, like special purpose and other country framework. For example, you need to issue a special purpose audit report, right? Special purpose audit report may be for the tax compliance purposes, right? Or maybe in IFRS, which is like other than US GAAP, or maybe any other country reporting framework. For example, you are a CPA in USA and you are doing audit of a company in USA, which has holding company, let's say in Europe or maybe in India, right? And you need to give the reporting to the holding company either in Europe or in India in their respective financial reporting framework. So those reporting frameworks reports will come under the special purpose or other country reporting framework requirement, right? Next one is key audit method. This has been recently added in 2018, and this is also, I expect, like maybe definitely will get tested in your CPA examination, which is key audit method. So in last chapter, in chapter number 4 and chapter number 3, if you remember, in the risk assessment phase, we have given certain areas, we have identified certain areas which are high risk area, or risk of fraud is there, or estimation or judgment, more complex judgment or estimations are being involved, right? So it's being auditor responsibility to identify those high risk estimate, high risk area, fraud risk area, right? To those area, generally as an auditor, we consider as a key audit matter, right? For an auditor, it's recommendatory to identify at least 1 or 2 key audit matter in all engagement, right? But for any reason, if auditor feel comfortable and they do not identify any key audit matter, then in that case, in their audit report, they need to mention they have not identified any key audit matter, and they need to give a justification and reason for why they believe there is no key audit matter, right? So now key audit matter is also being part of the audit report since from 2018 onward. Right, so you need to define the key audit matter, why you believe that audit matter is a key audit matter, and what all procedure you have performed to gain the comfort over those key audit matter in your audit report. This is not a qualification, this is not a supplementary information, this is not EOM, this is not other information matter. This is separate paragraph in the audit report, which is called key audit matter or critical audit matter. Make sense? Yes, no. And then lastly, we'll be discussing certain miscellaneous topics required for the conclusion of the audit engagement, right? So this is all we are going to cover in this week and next week. Make sense? Any doubt or anything need more clarification before we jump into the 5.1?
No, sir.
Okay. So let's jump into the main context. Report on audit engagement. I'm sure this chart is very much familiar to you guys. Are you guys familiar to this chart?
Yes, we have already studied on.
Yeah, we have already studied. So it's kind of right. Audit opinion. So first thing, if there is any issue, that is, if there is any material misstatement, if answer is yes, then we need to identify whether it's a gap issue or a gas issue. If it is no, then for issuer, you will be giving unqualified opinion. For the non-issuer, it is called unmodified opinion. So this terminology is different. For the issuer, it's qualified or unqualified. For a non-issuer, it's modified or unmodified. So the terminology is different for the issuer and non-issuer. That is something you need to keep in mind, because like in multiple choice question, it might be confusing whether to go with unqualified opinion or to go with unmodified opinion. So both of the answer will look absolutely right, but you need to look at in the question. The question is in context with the issuer or in context with the non-issuer, right? Make sense?
Yes, sir.
So it will be confusing when it comes to multiple choice question. They will give you everything right and ask you which kind of audit report as a CPA will be issuing. So there you need to look into the question, whether they are the question asking the question is for the issuer or for the non-issuer, and accordingly you will select the right answer, which is unqualified or unmodified.
Sir, I have one question, sir.
Yes.
Sir, as per the Indian practice, like when we were studying auditing as per the Indian gap, so were there differences? Like here it is for issuer and non-issuer. There was not so much focus on issuer and non-issuer as per the Indian auditing standards, what I feel, as far as I remember. Why is there such a difference in these whatever we are studying? Because the terminology is also different, like unqualified and unmodified. It could have
because I think, sir, it is not mandatory in US for the non-issuer. So
what is non-mandatory? Sorry, Kashish, I didn't understand your point.
well, I think it is not mandatory to audit. For issuer, it is mandatory to do an audit, but it is not mandatory for the
yeah. So in US, audit is non-mandatory for the non-issuer.
Yes, sir. That's why I think the changes is there, unqualified and unmodified.
No, I would say it's like every country or every law use different terminologies for different things. So it's just you need to accept as it is. There might not be any rocket science or rationale behind why they have used differently. This is what they believe would be better to understand or to segregate issuer and non-issuer. That's the reason they might have kept like separate word. But if you see like substance over form, like meaning of the both word is absolutely same.
Okay.
Right. But if you see like below chart, like the in case of issue, gap issue, gas issue, so it's all like same how we have in Indian auditing standards, same as in the gas as well, in US gas as well. But just a terminology, qualified or modified, unqualified or unmodified, that's only the difference we have. Right.
Okay.
So this is the chart you're talking about that are covered, all the aspects of the chapter 5.
Sorry, your voice is not clear, Kashish.
So this is the chart that you're talking about, like covering all the aspects of the chapter 5.
Yeah, yes.
Okay.
Yeah, this we have covered in the risk assessment phase as well in chapter 3. So it's more of repetition, but it's required over here when you are coming to the conclusion side, right? So if there is a gap issue, what is gap issue? Non-compliance with the financial reporting framework. That means you are not complying with US GAAP. If you are using US GAAP, you are not complying with IFRS. If you are using IFRS, that is called gap issue, right? In that case of scenario, if the impact is material, then you'll be issuing the qualified opinion for issuer or modified opinion for the non-issuer. If the impact is material and pervasive, then you'll be issuing adverse opinion, right? In our last class also, we have discussed a couple of examples. For example, let's say you have missed to record the rent expense or lease expense in your financial statement, right? So in that case of scenario, it will be having a material impact. Let's say the value is more than the materiality. So in that case of scenario, it has a material impact, but it may not have pervasive impact on the all financial statement line item, right? Whereas if you see in other scenario, let's say your sales are overstated. So that may have pervasive impact because your sales are inflated, your receivables are inflated, your COGS is being less, your margins are high, your gross profit is different, your net profit is different, it will be impacting your taxes as well. So that may have like more pervasive impact. So in that case of scenario, if there is a bigger issue, then it will be an adverse opinion for the gap issue.
This should be pervasive, right?
Yes.
This is pervasive written. I think
persuasive or pervasive, isn't it same thing?
Oh, okay. Persuasive is like persuading someone, maybe. Pervasive is like having an overall impact.
Okay, let's do it. Pervasive impact. Right. Now coming to the gas side, where we have scope limitation, where like firm or management is not allowing you to meet with the legal counsel. They're not allowing you, let's say, to do the inventory count. They're not allowing you to do the physical count of, you can say, PP&E, right? They might not allowing you to ask for bank confirmation. They might not allowing you to ask for the receivable confirmation. So those kind of things will come under the scope limitation. It may be intentionally or it may be unintentionally that you need to understand. For example, if you have a plant in a location like Israel, in Ukraine, so where practically at this point of time it's a war zone, so it's practically not possible to go there, right? So their management do not have bad intention, but it's practically not possible for you to go there and do the inventory count, right? So that's something you need to understand, whether it's intentionally or unintentionally. And if the impact of that scope limitation is material, then either you'll be issuing a qualified opinion for the issuer or modified opinion for the non-issuer. But if the impact is pervasive because of the scope limitation, Let's say, for example, if you have a significant litigation going on, the management is not allowing you to connect with the legal counsel, and the significant litigation may impact shutdown of your business as well. So in that case of scenario, there is an issue which may result into a going concern. And if it is an issue impacting the going concern, it has a pervasive impact. Then you can do the disclaimer of opinion. And if management do not agree with the qualification, adverse opinion, or disclaimer of opinion, and you have like major difference of opinion between you and management, then it's better to withdraw from the opinion. Make sense?
Yes, so, sir, the answer which I gave at the starting of the class when you asked the 3 types of reports, I think my answer was wrong then, because I was telling if it has pervasive impact, then it's an adverse opinion. But it would depend on whether it's a gas issue or a gap issue. Then.
Yes, yes. So partially you was right. That's the reason I said like, yeah, partially you're right. Yeah. Cool. Yeah, Pranjali, Kashish, Nimisha, so far so good. Sanchit?
Yes, sir.
Yes, sir.
Okay, let's dive into more detail. So this is what you need to keep in mind at a very high level. When you will be issuing unqualified or unmodified opinion, when you will be issuing qualified or modified opinion, adverse opinion or disclaimer of opinion, and when you will be withdrawing from the opinion. But how do you reach to those conclusions? That is something we'll be learning and understanding now. Evaluate the following before reaching to any conclusion. First one is audit evidence which you have obtained. What is the audit evidence? Yes, Mr. Ayush, Kashish, Rahul.
Hey, you should conference.
Huh?
Audit evidence. Okay, Kashish, you go ahead.
Kashish is silent.
No,
Rahul,
I
you're
guess you
saying
can-
something.
So yes, it's a sufficient and appropriate, documentations.
Yeah, sufficient and appropriate documentation obtained during the audit.
The audit, yes.
Yeah, Kashish.
Yes, sir. As you said, the
Sorry.
thing that has not been documented has not been written, has not been documented.
Your voice is not clear today, Kashish. Can you come closer to the mic?
So now it's clear.
Yeah, you are saying something?
No, sir.
Okay. Yes, Mr. Jain.
मेरे को याद सा नहीं आ रहा अब ना, मतलब कंफ्यूजन हो रही है क्या बोलूं.
Don't tell me in the last chapter मुझे कुछ याद नहीं आ रहा है.
नहीं चैप्टर याद है. In fact, that is the chapter I have most thoroughly revised. But to define audit evidence, I forgot. Okay.
Okay. So whatsoever the supporting, or you can say you have obtained during the audit procedure you have performed, whether it's like when you are performing a walkthrough, you have gained the understanding, when you have performed the test of control, you have tested the respective controls. In that you have performed like what all kind of procedure you perform, like inquiry procedure, inspection procedure, observation procedure, re-performance, recalculation, right? All those things which you document is your audit evidence, right? So अच्छा last line तो याद होगी तुम्हें.
Yes, now I remember the definition. Audit evidence is like the information which is used by auditor to arrive at the conclusions. वो sir आपने बोला ना अभी, so I remember that flow.
Work not documented, work not
done.
Yeah. So this is the thing I'm saying at that point.
Yeah. So second thing is appropriateness of audit documentation. First, what all audit evidence you have obtained. Second important thing, to ensure the appropriateness of those all audit evidence you have obtained and the audit documentation you have maintained. Third important thing, whether financial statements are free from material misstatement or not. That is also very important to reach to any conclusion, right? First and the foremost important thing, all audit evidence you have obtained during the audit. Second is appropriateness of those audit evidence and your audit documentation. And third is whether the financial statements are free from material misstatement or not. So these three things you need to evaluate before reaching out to any conclusion. Make sense? Yes.
Yes, sir.
Okay.
Yes, sir.
So how do we ensure audit evidence is good? First thing is, how do you evaluate the audit evidence which you have obtained? First thing is, based on the audit procedure performed and audit evidence obtained, the auditor should evaluate whether the assessment of risk of material misstatement at relevant assertion level remain appropriate. That means when you have obtained any audit evidence, right, is it being tying to your expectation or not, which you have created at the time of planning? So at the time of planning, you have done risk assessment, right? Do you remember risk assessment procedure? Chapter 3,
Yes, sir.
right? In the risk assessment procedure, you have done certain procedure to assess the risk at the respective financial statement line item as well as the assertion level, right? Do you remember 8 assertions? Financial statement assertions, completeness, accuracy.
सर आज लोग नहीं आए ना, आप बहुत गलत फायदा उठा रहे हो, पता है, नहीं तो सपोर्ट मिल जाता है, 2 इधर से आज से।
So मैंने तो तुम्हें कहा था, you can check with your friends.
फिर वो आ ही नहीं रहे।
Mr. Sanchit Karwanda, where is your friends? Sanchit is enjoying his breakfast, I feel. Sanchit Karwanda, are you here? Not at all. Pranjali, are you here? Oh boy, this is not right, huh? Nimisha?
Yeah, I'm very much here.
Very much here. Thank you. Thanks for your confirmation. I'm also evaluating my evidence.
Good external confirmations here. Very nice.
So yeah, come to the point here, Nimisha and Ayush, Rahul and Kashish, whosoever is like mentally here. So based on the audit procedure performed and audit evidence obtained, the auditor should evaluate whether the assessment of risk of material misstatement at relevant assertion level remain the same. So do you remember like 8 financial statement assertions?
सर पढ़ा था लेकिन याद नहीं है।
Okay, I'll remind you, like completeness. Was it there?
Sir, one, I want to try first.
Yeah, go ahead.
Sir, एक तो valuation.
Valuation and measurement is one.
Okay, valuation.
Valuation and measurement.
Measurement, okay.
Existence.
Completeness. And then there can be presentation and disclosure.
Presentation and disclosure, yes.
And then rights and obligations.
Rights and obligation, yes.
And
occurrence,
right? Okay.
Accuracy. And cutoff.
Okay.
Right. Okay. Partially right.
I was partially right over.
Okay, so those are the financial statement assertion. Why I'm reminding those points? Because these things are heavily tested in exam. You know, like sometimes we have those assertion or those pointers in our mind, but we need to repeat it again and again so that like at the time of exam, we know what exactly they are.
Right, sir.
Right. So here, what's the point number A? How do you evaluate the audit evidence obtained? So at the planning stage, you have done the risk assessment, right? Risk assessment you have done at the financial statement level as well as at the assertion level. Do you remember like we have 3 kind of analytical procedures? Do you remember those 3 type of analytical procedure? One we do at planning stage, what we call planning analytical review, POAR, right? Do you remember? In the chapter 3 we have done.
Yes, sir.
Yes, at the planning stage, what you have done, your previous year financial statement, your balance sheet, income statement, and in your current year estimated number, right? Based on that, you do the variance analysis and you have identified the areas where risk may be possible, right? And then based on your past year experience or the, you can say, experience of industry, you have assessed certain level of risk at the respective financial statement line item. And some of the area you might have considered as a significant risk area, which may be like involve like complexity or judgment or more of management estimate. Again, if you remember from chapter 3, we discuss on those area which is like warranty, hedging transaction, right? Or maybe sales and incentives. There we can say are the more estimation is being involved, maybe considered as a high risk area or a significant risk area. Then we discuss on like the areas where management overriding of control would be possible, especially with the sales and revenue area, where we consider the risk of fraud may exist. If you identified or if you have concluded like in the sales and receivable area there's no fraud risk, then you need to give a justification why you believe there's no fraud risk in that area, right? So at the planning stage, you have identified, let's say, warranty as a significant risk area, or maybe you have identified litigation claim and assessment as a significant risk area, and you have considered revenue and receivable as a fraud risk area. Let's say these are the 3 risk area you have identified. So when you have performed the respective audit procedure, is your conclusion same? Or have you identified new fraud risk area? Have you identified new significant risk area? So that is what you need to evaluate through the audit evidence which you have obtained during the audit procedure. Make sense?
Yes.
Yes. No.
Yes, sir.
B point is, instance of any fraud or error should not be assumed in isolation. For example, let's say you have considered revenue and receivable as a fraud risk area, but when you went for the physical count of cash count, and you have seen there's a cash embezzled, there's a shortage of cash, and the cashier has stolen the cash, right? That is a fraud. Yes, no?
Yes, sir.
So now do you consider that fraud is only in cash area?
No, they can be other areas as well where it can be.
Yeah. So for example, cashier has stolen the cash. That means his intention is illful. So what all areas he or his supervisor might be dealing, you need to look at those area more in detail, right? Especially like, for example, purchases and payments. Those cashier might be making the payments and his boss, his manager would be approving those payments, right? Then the impact would be on purchases and payable cycle. So if the cashier is collecting the cash from the sales, so then sales and receivable will also be impacted, right? So you do not see whenever there is a risk of fraud and whenever there is expected or suspected fraud or maybe actual fraud you have identified, you cannot look at that fraud in isolation of the respective financial statement line item. You need to look at the more pervasive possible impact of that fraud. Make sense?
Yes, sir.
Okay, third one, in developing an audit opinion, the auditor should consider
isolation. For isolation, particularly means like
isolation means
like
say that fraud risk is only in cash area. For example, if cashier have stolen certain cash, then cashier might be dealing with the payment for the purchases and he or she might be dealing with the collection from the sales, right? So its impact, it will impact because if the intention is illful of any person, wherever he or she will be dealing, he'll be trying to conceal, right? He or she will try to, you can say, mislead the information, conceal the information, or you can say embezzlement of the company's assets, right? If once a thief is always a thief, right? So you need to look at all those areas where he or she is dealing, or where his or her supervisor is also dealing, or whether any management person is being involved in those theft or fraud or not, right? So you should not look at those fraud risk area in isolation. You need to look at more pervasive impact. Make sense?
Yes, sir.
Yes, sir.
Okay, C point. In developing an audit opinion, the auditor should consider all the relevant audit evidence, regardless of whether it appear to collaborate or to conflict or to contradict the relevant assertion in financial statement. So here what they are saying, whatever the audit evidence you have obtained, you need to evaluate that audit evidence independently and objectively. Whether it is being supporting to your expectation or not supporting to your expectation, you need to evaluate that evidence objectively, and accordingly you reach to the conclusion. So sometime when you need to wrap up the work, for example, let's say a simple example of rent. So every month, let's say company is booking $10,000 of rent. In a year, they have booked 120,000 rent expense, right? And you have checked one invoice, and for that invoice is, let's say, is of $10,000 luckily, and you just do the math and you reach to the conclusion, yes, it's 1,20,000. And it's tied to your balance sheet, it's tied to your journal ledger, and you have not done anything additional to that. Whereas company has broken up that lease after 6 months and relocated to any other location for, let's say, $6,000. Whereas they are booking an expense of $10,000 and $4,000 someone is stealing. Right? In that case of scenario, you need to evaluate in more cumbersome at what things are actually going on rather than just meeting to your expectation. So you need to evaluate the audit evidence more objectively rather than just meeting your expectations. Right? D point is factor to be considered to evaluate sufficiency and appropriateness of audit evidence. So all the time throughout our journey of the audit section, we have seen, like we are all the time saying, what we need to ensure sufficiency and appropriateness of audit evidence. How do we ensure sufficiency and appropriateness of audit evidence? First is significance of potential misstatement in the relevant assertion. So what are factors you need to consider to evaluate and conclude whether the audit evidence you have obtained is sufficient and appropriate for the respective financial statement assertion? First factor you need to consider is the significance of potential misstatement in the relevant assertion. If it is a low risk area, then probably you may be comfortable with, you can say, internal generated document. If it is a significant risk area, then probably you will request the independent confirmation or independent, you can say, document from the third party, right? And if it is more of fraud risk area, then probably you would personally wish to visit, personally wish to do the inquiry procedure, personally wants to, you can say, verify more extensive documents. So your nature, timing, and extent of the audit procedure would be different. That is based on the potential mistake. At the time of risk assessment, if you have assessed the risk low, then probably nature, timing, and extent of your procedure might not be very extensive. But when the risk is assessed as high, or maybe fraud risk or significant risk, in that case of scenario, your nature, timing, and extent of the audit procedure would be more extensive, right? Second is effectiveness of management control in response to the risk. If the management has good internal controls around those areas, if the control risk is low, then you might be having less audit risk. And you're having less audit risk, you'll be testing less samples. Make sense?
सर अगर मैनेजमेंट कंट्रोल अगर इफेक्टिव होगा तो सर मतलब ऑडिट तो सर हम मतलब ज्यादा हम R&D नहीं करेंगे ना ऑडिट के टाइम.
No, we'll do less testing of substantive procedure, right? If management controls are good and we have performed walkthroughs and test of control and we gain comfort over the control, then substantive audit procedure will be less,
Yes.
right? Third is earlier year experience with respect to similar misstatement. If you have identified any misstatement in current year, how the management has dealt in response on the same misstatement in earlier year. That is also you need to keep in mind. Fourth is result of audit procedure performed. So what all audit procedure you have performed, what all document you have evaluated, how the corroborative impact of those audit procedure as well as evidence you have obtained for the respective financial statement line item and the assertion, right? Next is source and reliability of available information. Source means whether you have gained the information internally generated from the management, you have generated at your own, or you have taken from independent third party. So taken from third party is being more reliable, right, than the internally generated by the management. Next is pervasiveness of the audit evidence. Pervasiveness of audit evidence, for example, does the management have audit committee? So if the management have audit committee, then it will have more pervasive impact, more pervasive internal control. Does the audit committee meet quarterly to review the result? And the auditor, if answer is yes, that means controls are more pervasive. Make sense? Next is understanding of the entity and its environment, including internal control framework. So these all things you will impact the evaluation of the sufficiency and appropriateness of the audit evidence. Make sense? Any doubt on point number D? Factor that would be considered to evaluate the sufficiency and appropriateness of audit evidence. Any doubt here? Ayush, Nimisha,
Yes, sir.
Rahul, Kashish, good?
Yes.
Okay, last point. If the auditor has not obtained sufficient and appropriate audit evidence, then auditor should attempt to obtain further audit evidence, then consider the impact on audit opinion. So far, what you have done in the audit, you are not satisfied with that. So then it's been your responsibility to ask for more information, ask for more evidence, and evaluate those information and evidence before reaching to any conclusion. Right? So this is first point. Evaluate audit evidence which you have obtained to ensure the sufficiency and appropriateness of the audit evidence before reaching to any conclusion. What all three things you need to do before reaching to the conclusion?
Audit evidence is obtained and appropriateness of and whether financial statements are free of material mistake.
Right. So far we have done with the first point, audit evidence obtained. Evaluate the audit evidence obtained. Majorly what you need to keep in mind here is the sufficiency and appropriateness of the audit evidence which you have obtained. Right. Now jumping on to the second part, which is audit documentation. Right.
पर हम एक्सटर्नल सोर्सेज को ज्यादा रिलाई क्यों करते हैं एज कंपेयर टू इंटरनल वन, क्योंकि इंटरनल वन तो इंफॉर्मेशन तो सर सही प्रोवाइड ही करेंगे ना, तो सर एक्सटर्नल वन को तो ज्यादा नॉलेज होगी नहीं आगे.
Sorry, your voice is not clear. Why we are relying more on internal controls, you're saying?
Why we are relying more on external parties rather than internal, internal management?
Yeah, because external parties are third party, they are independent of management. Like for example, if you are an accountant, let's say, if you are a finance controller, let's say, and let's say Ayush and Rahul CPA firm is your auditor, right? And if there is any problem in your accounts, let's say you are saying showing a cash balance of $100,000, whereas your actual cash balance in the bank account is $50,000. And let's say Nimisha is your bank, NC Bank. So you have shown like $100,000 as a cash and bank balance, right? And you have given all the evidence to Ayush and Rahul CPA firm to come so that they can they feel comfortable. Yes, 100,000 is a cash and bank balance, whereas actual cash and bank balance in, let's say, Nimisha's bank you have is $50,000. So if Ayush and Rahul do not send the confirmation to the Nimisha and bank, then they may not be come to the you can say come to any evidence which will be contradictory to the what is being reflected in the financial statement, right? Because Nimisha and bank, they are third party, they are independent, they have no influence of the management. So the any evidence directly coming from the bank is being more reliable.
Yeah.
Make sense?
Yes.
Cool. So evaluate evidence, audit evidence obtained. First point we are done. Second point is audit documentation. Work not documented, work not done, right? So audit documentation is the most important work for an auditor, because like audit documentation is something which will be safeguard auditor in future if there is any problem, either with the client or with any regulatory authority. So that's the reason audit documentation is the most important part for an auditor to safeguard, to protect himself from any dispute or any problem or any regulatory you can say punishment in future, right? So that's the reason audit documentation, we as a CPA need to take it very, very seriously. First point is auditor should document first the overall response to address the assessed risk of material misstatement before reaching to the conclusion. Before reaching to the conclusion, you need to ensure that you have addressed all the risk which you have identified at the planning stage and additional risk you have identified during the performance of audit. So this is something you need to evaluate before reaching to the conclusion or before signing up any audit report. Make sense? Do you need any clarification why we need to ensure the response of all assessed risks? Yes, no. What is assessed risk? Hope you all are comfortable with this. What is assessed risk? Yeah, Nimisha, Rahul. Yes, Mr. Jain.
So the assessed risk of misstatement would be the risk which we have we have actually
Can we take it
assessed
as
because
evaluation?
the audit procedures we have conducted during the audit, substantive procedures and whatever procedures, and we have identified which are the risks which can lead to misstatement. That is the assessed risk of misstatement.
What is audit risk?
Audit risk. Yeah, audit risk is the risk that when we are conducting the audit, and while conducting the audit, we are not able to identify the risk which which may be missed out due to because we are not actually performing. We are testing on sampling basis and not conducting a detailed audit. So we may miss out on something. That is the audit risk.
What is detection risk?
Inherent risk plus control risk.
IRA of chain.
Detection.
Yeah.
Yes, Sanchit. Yes, Sanchit. Go ahead.
So inherent risk, control risk, and detection risk. Yeah.
Yeah. So what you're saying, Ayush, was detection risk.
Okay.
Right.
Sorry. So,
Right. So what is risk of material misstatement? RMM?
Inherent risk into control risk.
Inherent risk and control risk.
Control risk.
Right. So at the planning stage, you have assessed the risk, right? So before reaching to the conclusion, before finalization of the audit report, you need to ensure that the risk you have identified at the planning stage or during the audit, if any additional risk you have identified, have you performed enough audit procedure to mitigate those risks or not? Right? Isn't it your responsibility to take care of that?
yes, sir.
So that is what they are saying. Auditor should document Auditor should document the overall response to address the assessed risk. So all the risk of material misstatement which you have identified during the planning stage, as well as additional risk you have identified at the time of execution, it's being your responsibility to document what all audit procedure you have performed to mitigate those risks. Right? Second thing is nature, timing, and extent of the audit procedure you have performed. So it's been your responsibility to clearly define in your audit documentation what are the nature of procedure you have performed, at what time you have performed, and to what extent you have performed. Right? Nature. What is nature of audit procedure? Inquiry, inspection,
Observation.
Re-performance, recalculation, right, and confirmation. So those all are called nature of audit procedure, timing of audit procedure, interim date or at year-end date, right? Extent, like how many sample you have tested, 5, 10, 15, 25, right? So those all things you need to clearly document in your audit documentation. Make sense? Third is linkage of procedure with the assessed risk. This is very important. What it says, linkage of the procedure with the assessed risk at the relevant assertion level. I think like in our third chapter, when we were discussing risk assessment, we have discussed a risk control matrix as well. Do you remember that risk control matrix? Yeah, Nimisha, Ayush, Sanchit.
Yeah,
You
the
guys-
one that talks about risks and then the relevant controls to mitigate those risks.
And after that, we have like whether those control IT control, IT dependent manual controls, what is the frequency of the control, at what point of time we'll be testing those control, and what is being our conclusion after the respective testing. That is called a linkage document. Same way in your audit documentation also. You need to link all your audit documentation properly to the respective financial statement assertion level. For example, let's say for inventory valuation. So you have identified the risk is high for the inventory valuation. So here you need to document what all audit procedure you have done to gain the comfort over the valuation of inventory, right? So first of all, let's say at the year end, you have performed inventory count to ensure the completeness of the number, right? And after that, you have done the calculation of the rates. After that, you have done the re-performance or recalculation of the standard pricing or standard costing of the respective inventory at the respective stage, right? Then you have done the mathematical accuracy test, which is like your quantity multiplied by the rate for the raw material, quantity multiplied by the standard costing for the WIP and FG to reach to the valuation of inventory, right? And third, you have reduced the obsolete inventory provision. And how you have calculated the obsolete inventory provision, all things you need to mention in detail. Here you are linking what all audit procedure you have performed for the respective financial statement assertion, that is a valuation of inventory. So those linkage you need to properly document in your audit documentation. That's how you do, like Nimisha, Sanchit, Dipti.
Yeah.
Right?
Sanchez has, I think, left the meeting.
No, I'm here.
Oh, you came back? I was asking for you.
नहीं सर लिंकेज का जब कर रहे थे आई वाज जस्ट कि सारा भी समझा दे
So that's how you need to ensure the linkage in your audit documentation to the respective financial statement assertion, right? Next is result of the audit procedure performed. So what all audit procedure you have performed, like walkthrough, test of control, analytical procedure, inquiry, inspection, observation, confirmation. What is the result? Is it tied to the financial statement or not tied to the financial statement? If it is tied to the financial statement, it's okay. If it is not, then is it a material difference or not a material difference? If it is a material difference, then you need to discuss with the management whether they want to correct the misstatement or they are not comfortable correcting it. If they are correcting it, then it is fine. If they are not correcting it, then it's a gap issue. If it is a gap
issue or
issue,
gap issue.
yeah, no. If you have identified the misstatement, it's a gap issue.
Gap issue.
They are not allowing you to identify, then it's a gas issue, right? So in gap issue, you need to identify it's a material misstatement. Then what type of opinion? Come on.
Qualified
opinion.
Qualified or modified?
Adverse.
Right?
Oh, yes.
No. First qualified or modified. If it is a material misstatement and would have pervasive impact, then it is an adverse opinion.
Adverse.
Right? Second point, audit documentation in the record of first audit procedure performed, including nature, time, and extent, identified characteristics of the specific item which you have tested, audit evidence which you have obtained, conclusion you have reached, agreement of your conclusion to the accounting records. That is also very important. Do you perform tie-out procedure? Yeah, Nimisha, Sanchit, Dipti?
Yes, sir. FS tie-outs.
Yeah, you tie out with your audit documentation to the financial statement,
Right.
right? So why you do so? To ensure the completeness of your documentation.
Traceability, basically.
Ensure that there is no gap between what you have performed as an audit procedure and what is being reflected in the financial statement, right? The most important thing, audit documentation should be self-explanatory to enable an experienced auditor having no previous connect with the audit to understand all of the above. So this is the most important thing. Your audit documentation should be self-explanatory, right? Because there are, like, especially for the listed company, there are so many reviews. Your peer reviews, your quality reviews, your PCOB reviews, right? So in that case of scenario, your documentation should be so extensive and self-explanatory that you do not need to sit with the reviewer to explain each and everything. So it should be documented in such a way any experienced auditor which do not have experience of this engagement but have an understanding of audit can reach to the same conclusion by looking at your audit documentation which you have concluded. So that level of documentation is being required to maintain by each CPA. Make sense?
Yes, sir.
Okay. Let's jump into, okay, we have a few more topics here. Audit documentation, continuation of audit. Auditors should document significant finding or issues, action taken to address them, and basis of their final conclusion. So there is special consideration required from the auditor to give more attention and more appropriate and sophisticated documentation for the area which is being identified as a significant risk area or the area where there is a significant findings or issues, right? What are those findings? How you reach to those findings? What all audit procedure you have performed to gain the comfort over those findings, and how you have reached to the conclusion whether there is a material misstatement or not a material misstatement. In both the case, you need to document properly. Fourth is auditor should ensure that the documentation should clearly reflect who performed the work, the date on which the work was completed, and who reviewed. Right? If you see like Sanchit, Nimisha, Dipti, if you see in your documentation, you guys have like such a sophisticated platform where it reflects date, time, and the person as well who has prepared the respective document and who has reviewed the respective document, right? This is being actually a mandatory requirement for the audit documentation to ensure who has performed and when he or she has performed, and who has reviewed and when he and she has reviewed, to be appropriately documented in your audit documentation. How do you ensure in your respective audits? Nimisha, Dipti.
So the
Sanchit,
basically just the sign offs when we see the
yeah, yeah, signing off. When you are signing off, it reflects your name, your initials, as well as date, time, at what time you have done the work, and as and when the reviewer sign off, it will be reflect the reviewer sign off, their initial, their dates, timing, and the name as well. Right? Fifth point, if auditor depart from gas, here they are not saying like gas issue. Here they are not saying like management is stopping you to work. Here you decided not to follow gas. Then what you will do? You must document the justification of the departure. For example, the company have a plant in, let's say, Ukraine, and you have decided not to go there for physical count of inventory, right? But you need to define why you have concluded that not to go to the Ukraine and perform the inventory count. So there should be a legitimate and justified reason for the departure from gas, right? And second most important thing you need to document is how alternative audit procedure performed was sufficient to achieve the objective. That means you have done like, let's say, input output ratio, or you have done all the purchases and sales testing, all the incoming and outgoing inventory testing, right? How do you reach to the conclusion that the amount which is being reflected in the balance sheet for that particular location, which you are not doing physical verification of inventory count, is appropriate? Make sense?
yes, sir.
Okay.
Yes, sir.
Sufficient and appropriate documentation is essential to the quality audit. All documentation can be either form, whether it's paper form, electronic form, or any other media form. Working papers are the property of CPA. This is also very important. In multiple choice question, you will see whose property is working paper, audit working paper. So they may say like lawyers, client, CPA, bankers, right? In that case, you should be very much clear the working papers is being the property of CPA who is performing the audit, right? There might be saying like CPA who is giving consulting services. No. So audit working paper is the property of the auditor, right? Last thing is archival or completion of audit file. You know what is archival procedure?
Once we have done the completed the audit, we have to archive all the documentations.
Yeah, Nimisha, Dipti, do you want to add anything? What is archival of the audit documentation, and why do we do archival of the audit documentation?
It is the retention of audit documentation. I think from memory, the period is 7 years, 5 years, 7, I don't remember.
Yeah, 7 year for the issuer and 5 year for the non-issuer. Yeah, that's very right. So in how many days we need to archive? For the non-issuer, within 60 days from the report release date, and for issuer within 45 days from the report release date, right? So this is all about audit documentation. Just take a quick look. What all things you need to document? Oral response, nature, timing, extent, linkage, results, and conclusion. So what all audit procedure you have performed, audit evidence you have obtained, conclusion you have reached, agreement to the financial statement, and your documentation should be self-explanatory, right? And special attention should be given to the audit documentation of the area of significant risk, significant findings, significant issues, what all action you have taken, right? And if there is any departure from the gas, you need to give the justified reason and what all alternative procedure you have performed. Two important thing is documentation can be either in paper form, electronic form, other media form, and all the working paper of the audit is being the property of the CPA. And archival for the issuer 45 days, for the non-issuer 60 days from the report release date. Make sense? Yes, no?
Yes, sir. Yes.
Yes, sir.
Oh boy. Okay, third point and the last point, and then we have some practice question. Okay, what is the third point? Evaluate whether the financial statements are free from material misstatement. What are two things you have done so far? Audit evidence, ensure the appropriateness and sufficiency of audit evidence, and second is the audit documentation, right? Third and most important thing is to evaluate whether the financial statements are free from material misstatement. These three things are being required for what? To reach to the conclusion. To reach to the conclusion, whether you need to give a qualified opinion, modified opinion, adverse opinion, disclaimer of opinion, or withdrawal from the engagement. Right? So why we are studying these 3 points? Basically to conclude the audit, right? So, yeah, first thing is near to the completion of field work. Near to the completion of field work, evaluate accumulated result of auditing procedure affect the assessment of risk of material misstatement. So when you are about to conclude, when you are about to finalize your audit, so it's been your responsibility to take care of all the risks you have identified, whether you have ensured the appropriate documentation for the same, or whether you have ensured the sufficient audit procedure for the same to mitigate those risks or not. Second thing is, auditor must evaluate both known and likely misstatement. What is known or factual misstatement? We studied in last class. What is known and factual misstatement? What are the misstatements? Two types of misstatements.
Factual, judgmental.
Factual and judgmental. What is known and factual misstatement?
The one that's based on actual facts and figures. For example, a prepaid has been recorded, let's say, as a accrual or something. So that's a factual misstatement.
And likely and estimated misstatement, judgmental misstatement.
Arising
Which will most probably arise in future.
Like due to which arises due to accounting estimates.
What is likely and judgmental misstatement?
Sir, accounting estimates when we are doing it, then there can be a likely misstatement in that area.
What is that? How do you calculate?
It is due to the difference between the judgment made by the management and the auditor's judgment, because normally for estimates, we might just use our internal experts, and judgment varies from person to person. So it just arises around the variation between the judgment of the two parties.
Yeah, absolutely right. Very well, Nimesha. So wherever you have like estimation, and your estimation, auditor estimation is different than the management estimation, those differences all comes under the likely or judgmental misstatement, right? When it comes to like application of accounting policies in principle, and it's a factual misstatement or mistake, it comes under a non-misstatement. When there's a difference in the judgment or estimation of the management and the auditor, those misstatement comes under the likely misstatement or judgmental misstatement, right? So you need to evaluate both known as likely misstatement individually as well as at aggregate or at the financial statement as a whole level, right? Third is, if the auditor believes that the misstatement is or may result into any fraud, an effect, either effect could be material to the material, or auditor is unable to evaluate whether the effect is material or not. Auditor should first attempt to obtain additional information, additional audit evidence. Second, consider the implication on the other aspect of the audit. Third, discuss the matter with the senior management and those charged with governance, and if appropriate, suggest that the client consult with the legal counsel. So where there is a fraud, right, there might be two possibilities. One, the auditor can assess the impact, and second, auditor cannot assess the impact, right? When auditor can assess the impact, they will be consider the impact accordingly on the financial statement and discuss with the management and those charged with governance whether they are okay to take an adjustment, then it is fine. If they are not comfortable taking adjustment, then qualification or modification. Second thing is when auditor is not able to assess the impact. Then in that case of scenario, what all things auditor need to do? Need to obtain additional audit evidence, need to interrogate further, need to investigate further, consider the impact on other aspects, right? For example, we were discussing of fraud on cash. Cashier has done any embezzlement of cash. So how much it is impacting to my purchase cycle, how much it is impacting to my sales and receivable cycle. Those all things you need to investigate further to ensure the overall impact, to identify the overall impact, and discuss with the senior management, like who is being over and above, like with the treasury manager, right, with the finance controller, finance director, or maybe with those charged with governance, like audit committee, right? If appropriate, suggest the client to consult with the legal counsel or maybe involve like forensic team. Make sense? D point is, if auditor believe that the financial statement as a whole is materially misstated, the auditor should request management to make the necessary correction. If management refuses to make the correction, the auditor must determine the impact on the auditor report, qualification, adverse, or disclaimer of opinion. E point is, even if the auditor conclude that the effect of uncorrected misstatement do not result into material misstatement. So you have identified certain misstatement, but the impact of those misstatement might not be material. Here, auditor should evaluate the extrapolated impact or projected misstatement based on the sample before conclusion. For example, the company has booked rent expense of, let's say, $10,000 a month. And you have selected one sample. And in that sample, you have identified the actual rent expenses 8,000, right? So in that sample, the difference is $2,000. Whereas if you extrapolate to 12 months, the difference is 24,000, right? If that is material, then you will be discussing with the management and considering the impact on the financial statement accordingly. Make sense? What is extrapolation?
Yes, sir.
What is extrapolation?
So like we are evaluating, like if we have a material misstatement as per the example, and we have found out that it's being overbooked or underbooked. Okay, so we estimate that underbooking or overbooking on a monthly basis, and then make it extrapolate it, so that what would be the impact if we take the entire financial year. And that would actually be the extrapolation, and we need to identify then that after that extrapolation whether that results in a misstatement or not. So that is how we are,
Absolutely right. So next is, auditor can reduce audit risk by modifying the nature, timing, extent of planned audit procedure if auditor believe that such risk is unacceptably high. The auditor should perform additional audit procedure or certify the entity has adjusted the financial statement to reduce the risk of the material misstatement to appropriate level. So for example, whether you have identified the risk is high, you have performed additional nature, timing, extent of the audit procedure, right? If you believe that risk is still unacceptable, then you need to perform additional audit procedure, right? Or if the management, if you have identified any misstatement and management is comfortable to book that adjustment into the financial statement and reducing your risk to an acceptable level, then it is fine, right? So this is how you need to evaluate whether the financial statement have any material misstatement or not. If the financial statement have any material misstatement, then it will be impacting your audit opinion, right? It may be your qualified or modified, adverse, or disclaimer of opinion. Make sense? Any doubt, guys?
Yes, sir.
No, sir.
Done with this diagram? So I'm sure, like when you are revising for your exam, this diagram will definitely give you a quick glance of everything what we have studied so far, right? And these three key points you need to just memorize. Let's jump into some practice question. Question first. An auditor's decision to modify the audit opinion of an issuer's financial statement is most influenced by whom? What is the call of the question? Auditor decision to modify the opinion. Opinion of whom? Issuers or non-issuers?
Issues.
Issuers is most likely influenced by, first, whether the auditor opinion is based in a part on the report of another auditor, uncertainty related to the management estimate as of the reporting date that are adequately disclosed in the footnotes to the financial statement, the effect of misstatement on financial statement taken as a whole, the type of issuers expected to rely on the financial statement. So what is the call of the question?
Sir, like,
Most likely, what will impact the auditor's decision to modify an opinion?
So if you see first point, whether the audit opinion is based on the part of the report of other auditor. Who are another auditor?
No, sir.
Like joint auditor or component auditors, right?
Right.
Yes.
So that will not impact my report. Make sense?
Yes, sir.
Second is uncertainty related to management estimate as of the reporting date that has been properly disclosed. If it is being properly disclosed, it will not influence my audit report, right? So second also.
Yes, sir.
Then fourth, if you see type of user expected to rely. Type of
That will
user,
also
whether
not
it's
impact.
individual, shareholder, banker, it will not impact on my audit opinion. What will be impacting my audit decision is effect of the misstatement on financial statement taken as a whole. Make sense?
Yes.
फोर्थ वाले में एक्सटर्नल पार्टीज अगर होंगी तो सर हमारा ऑडिट ओपिनियन में इम्पैक्ट तो हो सकता है ना?
नहीं, like your audit opinion, there are two type of report. One is restricted report, second is unrestricted report. We'll be discussing more in detail about restricted report, but here we are presuming it's unrestricted and normal general audit report. So general audit report is being, anyone can use it, whether it's your shareholder, your banker, your creditor, your lender, your employees, or your vendors or customer. You know, who will using that report will not influence my audit opinion.
Okay.
I have responsibility toward the public at large, and I'll be taking due care when I'm performing the respective audit procedure. Right?
Sir, actually, third part consists of all the aspects. Like,
Sorry,
you will
third
take it
part?
as a whole. Consists of all the aspects like the effect of misstatement on the financial taken as a whole. So it covers all the aspects.
Yeah, everyone agree to it? Third point.
Yes, sir.
Okay, next question. An auditor would most likely issue either a qualified or disclaimer of opinion under which of the following situation? Qualified or disclaimer. Right? First one is the financial statement contain an immaterial departure from GAAP. So if it is immaterial, then there is no qualification, adverse or disclaimer.
Non-unqualified
So
opinion.
unqualified or unmodified. So first point is not make any sense. Second is the auditor perform alternative substantive procedure to provide adequate assurance due to missing documentation. So you have done alternative procedure and you are comfortable.
This is just normal testing that we do.
Right? So that will not impact your audit opinion. Third is there is a substantial doubt about the entity ability to continue as a going concern. So if there is a doubt, substantial doubt about entity ability to continue as a going concern, what kind of audit report you will be issuing?
And that's a.
so can we disclaimer of opinion, it should be, I suppose. No?
When you issue disclaimer of opinion?
No, impact is pervasive.
Disclaimer नहीं इसमें report नाम भूल रहा हूँ एकदम से मैं.
when we are not
Mhm.
able to comment on the report, on the financial statements due to lack of
You are
information.
again reaching to the same where we have started.
Yeah, I'm getting
I
confused.
think we go back and reassess all the numbers in the financial statements and prepare the audit report on
लिक्विडेट नहीं करेंगे इसमें हम लिक्विडेशन के अकॉर्डिंगली अकाउंट्स प्रिपेयर होंगे
Yeah. Go ahead. Nimisha, you are saying something.
So we reassess all the numbers in the financial statement and we prepare the audit reports based on the I don't know. I don't know, not liquidation basis for sure. It's something else. I'm not getting the word, but I know we reassess the numbers and everything.
Yeah, Sanchit,
I
you are
don't
saying
like
something.
So actually network यहाँ पे भी unstable हो रखा है अभी I missed what Nimisha said.
But what you were saying?
I was saying that when we have a doubt on going concern, so उस time पे we do the liquidation accounting as well, and we will issue a statement scope, not the scope limitation, but we will reach to management and might be as well statement issue तो करते हैं लेकिन अब qualified नहीं जाती उसमें.
Sir, we need to first identify whether it's a gap issue or a gas issue, right?
So yeah, going concern is a gap issue or a gas issue?
Yes, I think it should be a gas issue. If I was
Why they are limiting you?
no, limiting me, okay, but it's not non-compliance with financial reporting framework. It's not a non-compliance as such. The company is not a going concern anymore.
There can be an emphasis of matter paragraph for this.
Yeah, absolutely
gap,
true.
yeah.
Right, which is right. Yes.
The question, what is the call of the question? The auditor would most likely issue either a qualified or disclaimer of opinion under which of the following situation. If there is a substantial doubt about an entity ability to continue as a going concern, do you issue qualified opinion or disclaimer of opinion? Whether this fact is impacting
We
your
won't
audit
take any
opinion.
of the opinions like qualified or disclaimer in case of a going concern issue.
No, if the management has given appropriate disclosure, why you need to qualify or disclaim? Right? Or any adverse. First thing is that. So this statement is incomplete to reach you to any conclusion first, right? So they are saying like there's a doubt, but they are not saying like management has not, you can say, comply with this requirement of gap. First problem in this third line is that it's a incomplete statement to reach you to any conclusion. Second important thing here is one of the question is qualified and disclaimer. If there is a going concern issue and if management is not disclosing it, it has a pervasive impact. And pervasive impact with a gap issue because it's not a gas issue. They're not stopping you to not to perform any audit process. So if it is a gap issue and which will have a pervasive impact, then it will be adverse opinion. Right? So in either ways, how is it
a gap issue? But
no, you are not following the requirement of financial reporting framework.
Like
your company, the company for which you are auditing have going concern issue, right? So they cannot follow the continue like what are the three basic assumptions for preparation of financial statement or accounting? What are the three basic rules?
Management is responsible for the preparation of financial statements.
No. Go to the 11th standard. The three basic assumptions when you are making the financial statement is
it's a going concern. It's number one is going concern. Second is three basic assumptions. The book called losses.
Consistency and continuity.
Continuity, right.
Right. And what is the third one?
नहीं पता सर आप बता दो सर.
Okay, let's Google it out.
Google ही कर लेते हैं 11th में.
I think accrual basis of accounting.
Yes, accrual basis of accounting.
ये तो सर मेरे भी दिमाग में आता, डेबिट द रिसीवर, क्रेडिट लगे बार ये सब आया।
Going concern, consistency, and equivalence, right? So these
हाँ,
are the three basic fundamentals. So
हाँ,
going concern, right? Let's come back here. So going concern is a basic fundamental. That means it's a basic requirement of GAAP for application of GAAP. So if the going concern is an issue, then you need to, then management need to make financial statement on a liquidation basis of accounting. So it will be impact, all your assets would be at net realizable value, all your liabilities would be at the amount it will be going to get settled actually. So it will have pervasive impact on the overall financial statement. So it's a GAAP issue, not a gas issue. Make sense?
Sir, if company has company was preparing the accounts in liquidation, then they wouldn't have ID date. So उस case में फिर हम we would have said that we will give a normal opinion, not a qualified or disclaimer opinion.
That's what I'm saying. If you see the question, question says an auditor would most likely issue either qualified or disclaimer of opinion. And if you see third point, there is a substantial doubt about entity ability to continue as a going concern. It's just a statement. It's not a conclusion, which may force you to reach to any conclusion of the audit report. First, the statement is in itself incomplete. Second is, if for example, if it is a issue, then it is a GAAP issue, not a gas issue, which may result into a disclaimer of opinion.
Okay.
Right? That is the reason. Third answer is also wrong. What is fourth? The client attorney refused to respond to the letter of audit inquiry. That's a scope limitation. It's a scope limitation. When you have scope limitation, you'll be issuing either a qualified opinion, or if it does have pervasive impact, then disclaimer of opinion.
Disclaimer.
Right? Make sense?
Yes, sir.
Cool. Okay, this is it.